Mode of furnishing income tax return means an assessee can file these types of income tax returns or in these modes. First, paper return. Second, electronic return with digital signature. Third, transmitting the data in return electronically and thereafter submitting the verification of the return in Form ITR 5. Fourth, transmitting the data electronically in the return under electronic verification code. Compulsory e-return, company, political party electronically with digital sign, firm or LLP or individual or HUF, audit under section 44AB required, mode of return electronically with digital sign. If we talk about individual or HUF, where total income assessable during the previous year of a person, case 1, being individual of the age 80 years or more at any time during the previous year, or whose income does not exceed rupees 5 lakh and no refund is claimed in the return of income and furnishes the return in the ITR 1 or ITR 4. They can choose any of the given mode. Any other person, any mode other than paper. A resident individual other than not ordinary resident or a HUF must file return of income electronically if he or it has assets including financial interest in any entity outside India or signing authority in any account located outside India. Further, any person who has claimed any relief under Section 19 is required to file return electronically. Form ITR 1 cannot be used by a person who is an ordinary resident and has assets signing authority outside India or who has claimed any relief under Section 90. Form ITR 4 cannot be used by a person who is ordinary resident and has assets signing authority, income from any source outside India, or who has claimed any relief under Section 90, who has agriculture income exceeding rupees 5,000, has income taxable under Section 115 BBTA, or has income of nature referred in Section 115 BBE, or is either director in a company or has invested in unlisted equity shares or has any brought forward carry forward loss under the head income from hospital. Now, let's talk about the time limit for filing of return of income, where the assessee is required to furnish a report in the Form 3CEB under Section 92E pertaining to international transactions, due date 30 November, where the assessee is a company not having international transaction, 31st October due date. Any other assessees like where account of assessee are required to be audited under any law, 31st October, where the assessee is a partner in a firm and the account of the firm are required to be audited under any law, 31st October, in any other case, 31st July. Now, what is the fees default in furnishing return of income? Total income does not exceed 5 lakh, fees 1000. Total income exceeds 5 lakh as two cases. If the return is furnished on before 31st December of the assessment year, 5,000. In any other case, 10,000. When a return of loss should be filed, an assessee other than few is not compulsorily required to furnish return of loss. However, the following losses cannot be carried forward if the return of loss is not submitted within the time limit under Section 139. Any business loss, capital loss, loss from activity of owning and maintaining resources, loss from business specified under Section 3580. Loss declared in belated return cannot be carried forward. However, set of losses of current year is not prohibited while computing the total income, even if the return of loss is filed after the due date. One thing more, delay in filing return of loss may be condoned in certain cases if any unabsorbed depreciation and loss under head income from house property can be claimed forward even if the loss return is filed after due date under Section 139. Now, if an assessee fails to file return within the time limit or within the time allowed under notice issued under Section 142, he can be file a belated return. Time limit, assessee may file such return before the end of relevant assessment year or before the completion of assessment under Section 144, whichever is earlier. However, if an assessee files a belated return, he would be liable to fee under Section 234F and interest under Section 234A. Return of income of charitable trust. Every person who is in receipt of income from property held under the trust or other legal obligation, wholly or partly or chargeable or eligible purpose, or income by way of voluntary contribution on behalf of such trust or institution. And if such income, before allowing exemption, exceeds the maximum amount which is not chargeable to tax, must file a return before the due date as per section 139. Here, penalty may be fall rupees 100 per day. Failure continues. Return of income of political party or scientific associations. Every research association referred in section 1021, news agency, association or institution, specified employee welfare fund, any university or other education institution referred, any hospital or medical institution, fund or institution, they can file the return of under section 139 4C. Now, who can find the revised return? If an assessee discovers any omission or wrong statement bona fide in nature in the return file, he can revise his return under section 139(5). Time limit before the end of relevant assessment year or before completion of regular assessment, whichever is earlier. Here, replacement of original return. Once a revised return is filed, it replaces the earlier return. This signifies that the revised return should be complete in itself and not merely and necessary to the original return. Revision of revised return can again be revised if any omission or wrong statement made. Revision of belated return is also can be revised. Revision of lost return can also be revised. Now, let's talk about defective return. When a return is termed defective, a return of income is said to be defective where all the following conditions are not fulfilled. The return is furnished without paying self-assessment tax along with interest, if any. The annexure statements and columns in the return of income have been duly filed. The return is accomplished by the following documents: a statement showing the computation of tax liability, audit report under section 44AB, proof of tax deducted or collected at source. Now, verification of return. In case of individual, HUF, firm, limited liability partnership. In case of individual, it can be verified by individual himself. In case of mentally incapable individual, by guardian. In case of HUF, verified by Karta. In case of firm, managing partner and adult partner can verify it. In case of LLP, designated partner and any other partner prescribed person can verify it. In case of local authority, principal officer, political party chief executive officer, company in general managing director can verify, any member or principal officer, and in any other person competent act on the behalf. Now, let's talk about permanent account number. Permanent account number is a alphanumeric 10 characters code given to a person by income tax department for the purpose of identification of the assessee. A person can have only one PAN. Allotment of PAN can be possible on application. As per section 139, rule 114, following persons are under statutory obligations to apply PAN within the time limit stated as in this chart. Any person whose total income exceeds maximum exempted limit, any resident person other than individual, and aggregated amount to like 50,000 financial year, any managing director, sales turnover gross receipts are likely to exceed 5 lakh, any person who is furnished under return 139 4A, any person who requires export import code, and assessee under the GST. They all need to apply for the PAN. Importance of PAN. Failure to apply PAN can be attracted to a penalty of rupees 10,000. PAN or Aadhaar number must be quoted in all documents and challan. A person to whom PAN is allotted is required to quote that number in all his returns. any correspondence, any other document. Income tax authority, a person to whom PAN is allotted, is required to quote that number in challans for payment of any sum due under this Act. PAN or Aadhaar number must be quoted in documents pertaining to certain prescribed transactions, transaction related to sale, opening of an account, making application for issue of credit card, debit card, opening of demat account, payment exceeding 50,000 to any mutual fund for purchase of its unit, payment exceeding 50,000 to a company or an institution for acquiring debentures issued by it, payment exceeding 50,000 to RBI for acquiring bonds issued by it, deposit in cash exceeding 50,000 during any other banking company, cooperative bank, purchase of bank drafts or pay orders or banker's checks 50,000 during any one day. Now, quoting of Aadhaar number. Every person who is eligible to obtain Aadhaar number shall quote Aadhaar number in the application form for allotment of permanent account in the return of income also. Where the person does not possess the Aadhaar number, the enrollment ID of Aadhaar application form issued to him at the time of enrollment shall be quoted. Every person who has been allotted PAN before 1/7/2017 eligible to obtain Aadhaar number shall intimate his Aadhaar number to such authority. The provision of this section shall not apply to notified persons or state persons. Hope you understand about the filing of returns and the process of filing the Aadhaar number and PAN number while calculating the and filing the returns. Thanks and have a good day.